For all my fellow financial nerds out there, it's a big week for us. It's a very exciting week for us. It's been a very full week. Our platters have been full. Our plate has had plenty to eat on it, and we have been munching down. We've been enjoying it. This week, like I said, it's a massive week for all financial nerds because a third of the S&P 500 is reporting earnings this week. However, the focus is mainly going to be on 5 companies. Well, technically 6. 6-ish companies. And those companies make up about 25% of the S&P 500. And those companies include Microsoft. Y'all know I love my Microsoft. Apple, Alphabet, aka Google, Facebook, and Amazon. And I'll throw in there Tesla just because Tesla is one of the biggest companies in the S&P 500 now. Why is it that big? Don't ask me. It's just, FOMO and everybody piling on into Tesla. But these companies play a major role into the direction that the S&P 500 will go. Well, the first thing we should think about is the fact that since March, when we had the major sell-off of all stocks, my roommate's cooking something. It smells real good. Sorry for the interruption. But anyway, now since the sell-off that we had due to the Rona pandemic last March, the S&P 500 has risen 87%, adding about $50 trillion worth of value to the index in just over a year. This is the best 12-month rally that we have had since the 1930s. And this weekend also, we get to hear the Oracle, we bow, speak to us at the annual Berkshire Hathaway's shareholders meeting. So it's a lot of good stuff going on this week. It's a lot of exciting things that yo boy, a financial nerd, is extremely excited to get into. But let's start off this earnings update this week with Tesla, who reported earnings on Monday. And Tesla did its thing and absolutely obliterated earnings. And a word that you will be hearing me say a lot when it comes to Tesla's earning, and a lot of words that will be heard for Tesla moving into the future apparently, is Tesla's numbers are always hitting new record highs. Tesla had a record Q1, delivering over 184,000 cars, the most it has ever delivered in one quarter. Mostly it was the Model Y and the Model 3 cars. Of course, these are the more affordable versions of their more luxury Model S's and Model X's. They absolutely destroyed revenue numbers as they grew revenues over 74% from the same time last year. They brought in about $10 billion and profits over $438 million, which is unbelievable. Well, it's not unbelievable. It's very, very well timed and well positioned. They also sold about 10% of their Bitcoin stake. But however, the biggest news from the entire earnings call is the surge in which they have for their new factories, their new gigafactories in Berlin and in Austin. They said that those plants will be operational hopefully later on this year, and they will begin to be producing the Cybertruck and the Tesla semis as well. However, Tesla is no longer the only player in the EV space. Its market share actually dropped from 82% to 70% as more manufacturers are getting into the EV space, and the EV market is continuing to grow and grow and grow. So we'll see exactly what happens with Tesla. Is Tesla going to be able to have such a massive lead before other manufacturers come into the game and be able to give a bunch of different options for people to buy? Or is Tesla going to fall behind and these manufacturers take over? So that's the game plan. That's the question that everybody's asking themselves when it comes to Tesla. Then on Tuesday, we had a bit of a doubleheader. We had Microsoft and Google both reporting their earnings, and they both did really, really well. Microsoft continues to grow. Actually, I'll pull it up on screen. Microsoft continues to grow its revenue with the help of its cloud services, spurred on by the pandemic. However, Azure cloud service only grew 50%, which is about what it had grown at the end of last year as well. So last year it grew 50% and this year it grew 50%. So a lot of investors got spooked and they were like, it's not growing that fast anymore, which a 50% growth when you already were massive is massive. So I don't know what investors are expecting, but anyway, that's besides the point. My main thing when I look at Microsoft is not just their Azure cloud services, even though that's the biggest money maker for them right now. I also look at other things like their Xbox computing service, and also look at things like their LinkedIn services and their Office and business products. So that's your Windows commercial products and those kind of things. How are those growing? Because those are the bets going into the future that Microsoft is going to make to ensure that they continue to grow and grow very well. And some of the acquisitions that they're making, such as the acquisition of Nuance and the acquisition of ZeniMax, which is the game publisher that they bought, are going to feed into that cycle to help Microsoft get to the point where they continue to grow. And for me, I love the earnings report. This was great news. However, I don't know if this is something that can continue, but we'll talk about that later on in the show. Now, moving on from there, we had Google. Google basically saw earnings estimates and was like, y'all are joking, right? Like, y'all playing with us, right? Like, this is really what y'all are estimating for us to reach? Like that, this is child's play. Google was like, what? Are y'all serious right now? Like, this is literally what y'all think we're gonna make? Like, this is what y'all think? Google absolutely destroyed earnings. It reported about $55 billion in revenue, which is an increase of over 34%. This was mainly brought on by YouTube revenue. YouTube revenue rose about 49% in the last quarter, up to about $6 billion. Its profits from Q1 was almost double what it had been a year prior to today. So then again, we had that apocalypse that happened due to the pandemic, but then you can see like it has more than brought itself back up from that stages when we were dealing with the pandemic. So Google is really, really returning. But even bigger than that is Google is looking at TikTok and saying, we coming for you, TikTok. We ain't playing no more games. We come in directly for you. During the earnings call, one of the points that Sundar Pichai said during the earnings call was the fact that YouTube's TikTok competitor, Shorts, is garnering about 6.5 billion daily views, which is an increase from 3.5 earlier in January. So basically, they've doubled the amount of daily views that they're getting out of just Shorts, which means they're coming directly for TikTok. They're coming right for TikTok. And unlike TikTok, YouTube is a much easier platform to monetize. So a lot of people actually try to get their audience from TikTok over to YouTube. And now and especially because unlike on TikTok where you have to basically go viral over and over again, YouTube is not that case. Once you build an audience, you have an audience. And so seeing that whole dynamic play out is going to be so interesting. But the point is YouTube continues to grow. As a matter of fact, there was a data that was done by the Pew Research, which found that over 81% of adults now watch YouTube. 81% of adult, which means that if you're walking down the road and you see somebody on their phone watching something, 8 out of 10 times, that person is probably on YouTube. This is why Netflix didn't say that Hulu is its competition or Disney is its competition or any of these other streaming networks are its competition. Its competition is YouTube. YouTube is the competition for Netflix because 1, YouTube is free. And 2, it has an unsurmountable amount of content because there are always somebody somewhere uploading some kind of video for somebody to go watch, for people to watch all the time, because it's not made by, like, unlike Netflix, where Netflix has to create its own content. The content on YouTube is being generated by users, and users are always trying to come up with new things. So that's why Netflix is like, y'all keep talking about the fact that Disney Plus is growing and Hulu is growing and all these. That's not the problem. The problem is not that. The problem is sites like YouTube, which can completely dominate and take away all the attention because of just that flywheel that it has. Because people get on YouTube, they watch videos, they're like, you know what? I want to make videos too. So they post their videos, they go watch other people's videos, and that flywheel just keeps on spinning, and Google keeps on serving up all those ad dollars. Google also announced a $50 billion share buyback, which I'm not a big fan of share buybacks. However, Google is one of the few companies that has such unbelievably good cash position, almost no debt, that they can do share buybacks. And at the same time, they also announced that they're going to still be investing in the business, with announcing about $7 billion in other opportunities, or basically investing $7 billion in data centers and also in new office spaces. So Google is doubling down on the fact that we're going to go back to the office, and they're building stuff out. So for me, this was an amazing earnings call, and I just regret not investing more in Google. But however, I'm going to be investing in Google. That's like one of the companies, Google, Microsoft. Those are two of the companies that I really like. Google, Microsoft, Apple. Of course, I'm like a typical investor, just like anybody who invests in the S&P 500. It's basically Google, Microsoft, Apple, a third of the biggest holdings that you're going to have. And those are the three that I have right now. Unfortunately, Facebook just released their earnings, but I didn't have time to go through it. So we can go through it together real quick. Pretty big number. Revenues rise by 48%. Let's see. The stock is up 6%. I don't really care about that. Daily active users dropped a little bit, which is something we're going to be seeing more of. Just like we saw with Netflix, we saw a slight drop, or Netflix subscriber numbers come down because as people go back outside, they're not going to do all of that stuff. But here's the big takeaway from big tech's earnings that we just had, from all the earnings. The pandemic has been very, 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 very lucrative to big tech companies. It has been basically the ultimate example to show that these businesses can weather certain storms, because the pandemic played into the strengths of big tech, whether it's with Google and Microsoft with their cloud services, or just with their services of being able to stay at home and watch videos all the time, or whether it's with Apple with the products that they make that people went to go buy new phones and all these other stuff. I don't have Apple's numbers, but the point is, all these, and also we have to include Amazon into this mix as well, is all these companies benefited greatly from the pandemic. Now the question on everybody's mind is, are they going to be able to carry this on, or was growth pulled forward due to the pandemic? That's the question that's on everybody's mind. Has a lot of the growth that these companies were supposed to experience further down the line been pulled forward due to the pandemic? That's one of the questions that people have on their minds. The way Sundar Pichai said, he said that this is just the beginning. I tend to agree with him, because we're not going to go back to the old school. Yes, some things might nip a little bit, might slow down a little bit. Like, we're probably not going to be watching as much YouTube as we did during the pandemic. However, this is now a new normal for us. This is now the new age. I don't expect to see a lot of companies starting to be like, you know what? That was just for the pandemic period. We don't need cloud. No. That was already a wave that had begun. That's just going to continue being the wave, where cloud services are going to be a thing, where we're going to be watching a lot more YouTube rather than watching regular TV. As a matter of fact, they had the Oscars the other night and almost nobody watched it, because nobody really cares about the Oscar. Because at the end of the day, it's not about the viewers of these movies. It's about the actors, and nobody really cares about that. We'll rather watch an award show about YouTube or about all these other platforms. So that's where things are switching up as we move into the future. But however, the question is, how much of that growth has been pulled forward? How much growth can we expect from a lot of these business as we go into the future? Is YouTube ad revenue going to cut down, or are they going to continue growing as we go into the future? But anyway, that's all I got for y'all this week. It was just going to be a quick rundown. Oh, wait a minute. We got to talk about it. Apple just released their earnings call and said, oh my God. Woo. Okay, these numbers are incredible. Apple reports another blowout quarter with sales up 54%. 54. Oh my God. Oh my goodness. Wow. This is incredible. So let's see. It says Apple reported double-digit growth in every single one of its product categories. Its most important product line, the iPhone, was up 65% from last year at the same time. Its Mac and iPod sales did better, with its computers up 70%. I mean, it makes sense though, because a lot of these numbers, okay, you know what? I mean, this is cool and this is a big deal. The problem with these numbers is it's comparing it back to the beginning of last year, the first quarter of last year, which was right about the time when coronavirus hit. And remember, like we've been saying, a lot of that growth has been pulled forward because a lot of people rushed out to buy new software, buy new devices and all that stuff. So comparing these numbers year over year, I don't like it. I don't like the comparison of doing it year over year. It's not a good one-to-one comparison. The better comparison would be to compare it to like what happened in 2019. That would be a much better comparison to really get us to understand and have a good feel of what actually happened. So let's see what they did. So they did, wow, oh my God. They brought in $90 billion in revenue. Oh my gosh, how does this company do it? Remember, in the end of the year quarter, which is the best quarter of Apple, they brought in over $100 billion. $90 billion. Oh my gosh, this company just prints money. Apple literally just prints money. And then let's see, their gross margin, 42%. Oh my God. Oh, that means that for every dollar that Apple makes, they keep 40 cents. That is unbelievable. Oh my gosh, that's incredible. That's Apple. They just print money. Like literally, Apple just prints money. They just literally print money. That's what they do. Oh my gosh, Apple is too good. They're too good at this. This is why you can't like not invest in Apple. And then plus they're going into other categories. Let's see how the growth. I think one of the things that I look more towards, it's not their iPhone sales anymore. I look more towards their services revenue. So they grew service revenue $16.9 billion versus they estimated they were supposed to do $15 billion. So that's really good. And then other products, which is your AirPods and all that stuff, they did about $8 billion there, which is whoo. I mean, Apple, man. Apple just keeps killing the game. $90 billion. Oh my gosh. This company, how are y'all making $90 billion in one quarter? Oh my gosh. Oh man, that's incredible. But anyway, I'm going to go ahead and kill this podcast here. My mind is absolutely blown from seeing these numbers from Apple. My gosh, man. But anyway, I'm going to catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all. And we out. Peace. I hope you enjoyed that little snippet of the Rambling Mind podcast. If you want more of the Rambling Mind podcast, or if you want to listen to the whole episode that you just heard, go check it out on any podcast listening platform, whether that be Anchor, Spotify, Google Podcast, Apple Podcasts, Breaker, Stitcher. I could go on, but you guys already know which podcast you love to use to listen to. So go check it out. Link down in the description as well. I'm gonna catch y'all later. Peace.